I kind of hope all governments will be this stupid until it's too late. Eric Dale on X. This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Guten Tag, Buenos Dias, Morian, and welcome to episode 205 of the Bitcoin Bulletin Podcast. What a whirlwind week it has been. And to think just days ago, plebs were beginning to lament Bitcoin's recent lack of volatility. Well, that certainly ended with a bang with twin God candles. First with a 10,000 US dollar daily green candle going up on Sunday, only to be followed a day later with a $10,000 daily red candle. There has, of course, been euphoria as well as outrage at the state of nation-state Bitcoin adoption. But one thing, of course, is certain. 2025 is going to be a wild ride, and it is only just begun. Of course, all of this mania comes down to price obsession, so it is only fitting that we remind ourselves from time to time exactly why we are Bitcoiners in the first place. It is important to remember to keep that low time preference, to remember to strive to remain humble while we're stacking those sats. Of course, Jameson Lopp, at Lopp on Twitter, and I've had my fair share of times when I've disagreed with Jameson recently, but he put this all into perspective when he, it's actually a tweet that's a little over a month old now, but he posted, "Give a man a gun and he can rob a bank. Give a man a bank and he can rob the world." And I think that tweet basically sums it all up. You know, we say all the time that Bitcoin fixes this, fix the money, fix the world. And it's important to remember that that is why we are Bitcoiners, that, you know, we didn't get into Bitcoin hoping that the United States would adopt Bitcoin as a strategic reserve asset, or that Wall Street would start FOMOing into Bitcoin. That's all just a bonus that when that happens, that drives the price up, which helps drive adoption, unfortunately, because human psychology says that people become more interested in Bitcoin when it's the shiny new thing. It's the price action of Bitcoin that's attracted many of us to Bitcoin in the first place. And it's only then when you actually dive in, when you dive down that rabbit hole, when you put in the 10,000 hours of research, you listen to the podcasts, you read the books, that you truly begin to actually understand Bitcoin. But again, for normies, that price action, while that's not why we're here, is kind of an essential ingredient to get to onboard normies. And we can't have hyper Bitcoinization without onboarding the normies. We certainly can't have Satoshi's original concept of Bitcoin being a peer-to-peer electronic currency without the plebs using it as the people's peer-to-peer electronic currency. All right. Well, as I alluded to, we definitely have a lot to talk about today. But before we get into the nitty gritty, let's take our customary look at Bitcoin's vital statistics. At the time of this recording, we are sitting at a block height of 886,497, and Bitcoin is ringing in at a US dollar value of 91,510 US dollars. And that is significantly higher than last DCA Wednesday when we purchased for 84,470. Of course, that wasn't even the bottom. If you did buy the dip, congratulations, because I don't have a crystal ball. I can't tell you when we will never see sub $100,000 Bitcoin again. All I can tell you is that it will eventually happen. And while we are still sub 100,000, we are still able to stack at least 1,000 sats per dollar. Currently, Bitcoin's price means that every fiat dollar that we convert into Satoshis will score us 1,093 Satoshis. And remember, there have been 4 stacks now on DCA Wednesdays where that has not been the case. Every time we've stacked when the price was above 100,000 US dollars, we received anywhere from, we got 992 sats per dollar back on December 18th, and as low as 958 sats per dollar just on January 29th, so just a little over a year ago. Of course, how easily we forget that, it was only last November, when Bitcoin had never even hit 100,000 US dollars before, when 90,000 US dollars was a new all-time high. It seems like one of the ways that Bitcoin changes you is it changes your base level, what we think is normal. And every time Bitcoin sets a new record, all of a sudden it becomes disappointing that here we are at $91,510, that just a couple of months ago, around the holiday season, that would have been an all-time record high. We would have been popping champagne bottles, and here we are finding ourselves disappointed. But I like to remember that if you zoom out, basically Bitcoin has still been exploding up and to the right on just the yearly chart. But again, that when Bitcoin was over $100,000, I and many other people found ourselves wondering, were we ever going to be able to achieve our Bitcoin stacking goal? Hopefully not your original Bitcoin stacking goal. Maybe you've changed that goal as you've achieved certain milestones. And, I've done that myself. I set my first goal was a pretty lofty goal, but not an inconceivable one. And then of course, as soon as I achieved that, I adjusted that goal again. And I do that from time to time. But even so, it started looking like, if Bitcoin is going to go to 150 or 200,000 or 500,000 or more, that new goal that I'd set was going to get more and more out of reach. So I know a lot of people were in that boat. I saw a lot of posts on Twitter, on X, a lot of posts on Reddit, where people were saying, well, it looks like I'm too late. I'll never be able to be a whole coiner or whatever that goal was ever again, because it's just out of reach. You had British Hodl, who I can't believe is getting as much attention as he is, but I think he's a scammer, but that's just my humble opinion. So it's mind-boggling that he's been on as many mainstream podcasts as he has. But, one of the things that they emphasize every time they have him on the podcast is where he says that, you needed to set that one Bitcoin goal, and that was now a goal only for the wealthiest amongst us, because the average person would never be able to attain one whole Bitcoin. The point being, cherish these lower Bitcoin prices while we still have them, because back, like when we look back on the original OGs, where they were able to stack Bitcoin for $1 or less than $1, or when Laszlo bought that first 2 Papa John's pizzas for 10,000 Bitcoin, and we think, oh boy, if only we had been around then. In the not too distant future, people are going to look back and they're going to say, you got 1,000 Satoshis for just $1 US. I mean, eventually, if we achieve the hyper Bitcoinization that I believe we will, I mean, maybe not today, maybe not tomorrow, maybe not even my lifetime, but eventually we'll achieve dollar sat parity. And that's $100 million per Bitcoin price target. But when we do, people will be paying, $1 for a single Satoshi. So the 1,093 sats that you can get for just $1 now, people will be like, that's $1,000. $10 will get you $10,000 worth of Bitcoin. If you invested just $100, you'd have $100,000 worth of Bitcoin. And, it's one of those things, again, that people tend to overestimate what they can accomplish in a year and underestimate what you can accomplish in 10 years. And if you look at just 10 years into the past, which you can do easily now because Bitcoin's, a teenager, but at any point in time, if you look back for someone that's been in Bitcoin for 10 years and you look at their price point where they got into Bitcoin, you're like, that's just amazing. Pretty much anybody who's been in Bitcoin that accumulated even back in 10 years ago, even 50 Bitcoin wouldn't have been a whole heck of a lot of Bitcoin, but anybody who accumulated any sizable stack of Bitcoin whatsoever and held it and still has it 10 years later is doing pretty phenomenal. And I don't see any reason why that won't hold, because I firmly believe we are still early. I mean, we're only talking about 3% global Bitcoin adoption. That's the equivalent of where we were on email in like 1990. It's the equivalent of where we were with smartphones around 2000 or 2001. The iPhone hadn't even come out yet. So again, it's important to have that low time preference, to zoom out. Remember, you're in it for the long haul, and remember that fixating on Bitcoin's price on a day-to-day basis is a distraction, because price is nice. It makes you feel more comfortable, maybe more emboldened, more encouraged, gives you more conviction in your beliefs when you see that, you have a real world fiat value for your humble stack, and that's increasing, that while the price of a new home for most Americans is getting increasingly out of reach, The price of a new home in terms of Bitcoin has been dropping. It's been getting cheaper. It's 50% cheaper today than it was just a year ago in Bitcoin terms. So, that's nice, and that's easily distracting. But again, that's just a side note. That's just a benefit. That's just the cherry on top, the icing on the cake, so to speak, of what we're really here for. And that's ending fiat debt slavery, ending forever wars, maybe ending silly, wasteful programs that you may or may not support, because when the government can't just print money out of thin air, all of a sudden you have to prioritize what you spend that money on. It's just like when you're planning your household budget. You might really, really want to buy something in the moment, but when you stop and think, well, if I buy that shiny object right now, I'm not going to be able to buy dinner next week, or maybe it'll be harder to make the house payment or the car payment, or I won't be able to stack sats, for example. It really puts things into perspective in terms of what is really important. All right, once again, I digress. Bitcoin's current price means we now are looking at a $1.81 trillion market capitalization for Bitcoin. That's putting us about neck and neck with silver once again, with the market cap of silver, but still less than 10% of gold's market cap, which is currently estimated to be about 19.4 trillion, a little more than 19.4 trillion. And even if you only believe that Bitcoin is basically the new version of gold, digital gold, like all the properties of gold, but better, gold, the scarcity of gold, the utility of gold, but even more usable, fungible, more transportable, easily verifiable, and actually more scarce because it's got absolute scarcity with that $21 million hard cap. Point being, even if you believe that Bitcoin will only be treated like digital gold, it'll only be a treasury reserve asset sitting in vaults or hardware wallets and vaults in nation states and major corporations, even if that would be all that Bitcoin would ever achieve, which would be significant, Bitcoin would have to more than 10x from here just to do that. And that's certainly mind-boggling to think of. There is a lot of money out there floating around in various investments. And despite the fact Bitcoin has a market cap of 1.81 trillion, again, that might seem like a lot of money, but we are still early. And we're certainly early when you compare Bitcoin to gold, for example. And we're not even talking about comparing Bitcoin to the S&P 500 or real estate, for example. Speaking of gold, for those of you who do continue to value your wealth in those shiny yellow rocks, it will currently cost you 31.2 ounces of gold to purchase just one Bitcoin. In the last couple of weeks, it seemed like Bitcoin had been on sale a little bit when you were comparing it in terms of ounces of gold per Bitcoin. But again, if you zoom out, gold has been trending to zero in Bitcoin terms, as has everything else, even with gold setting new all-time highs as the value of the U.S. currency diminishes and it takes more US dollars to purchase 1 ounce of gold. It still is trending to zero in Bitcoin terms. All you have to do is zoom out, just a year. If you look at last March on DCA Wednesday, just a year ago, we were talking about, Bitcoin had just breached 30 ounces of gold for the first time at the end of February 2024. If you go all the way back to just January of 2024, there was a time when it was only about 10 ounces of gold to purchase just one Bitcoin. So certainly, even though we had a bit of a dip just in the last couple of days, again, that's one of those zoom out things. And we're still talking basically 2 pounds of gold to purchase just one Bitcoin. And I firmly believe, as I've asserted over and over again, by the end of this bull run, which I don't think we're going to see until the end of 2025, at least the third quarter, fourth quarter, beginning of fourth quarter 2025, sometime around the end of September, beginning of October, we're going to be talking multiple pounds of gold to purchase just one Bitcoin, and not 2 pounds, more like 3 pounds, 4 pounds, maybe even 5 pounds or more of gold to purchase just one Bitcoin. And again, that's just this bull run. If you zoom out another 4 years, the next halving bull run, or 4 years after that, which would be, the 2032 halving cycle bull run, we're going to be talking tons of gold eventually to purchase just one Bitcoin. Certainly pounds of gold in the not too distant future, and not ounces. For those of you who value your wealth in pizza, one Bitcoin will currently purchase you 5,118 large pepperoni pizzas from Papa John's. I mentioned just a couple of minutes ago that, it was 15 years ago now, back on May 22nd of 2010, Laszlo made the first real world purchase with Bitcoin when he purchased 2 large Papa John's pizzas for a whopping 10,000 Bitcoin. Now we're almost to the flippening where, we're halfway to where instead of 1 Bitcoin purchasing or 10,000 Bitcoin purchasing 2 pizzas, 1 Bitcoin will purchase 10,000 pizzas. And if you cashed out 1 Bitcoin and you tried to eat the entire value of that Bitcoin by eating 1 pizza a day, every day, you would have to do so for more than 14 years. And that's just at Bitcoin's current value. I've often said if you tried to eat 1 whole Bitcoin, a pizza at a time, that you would never be able to do so because, again, 14 years from now is more than 3 additional halving cycles. We haven't even seen this cycle's all-time high yet. So you're going to have 2, 3 more all-time highs after that. So I firmly believe it's going to get to where we're going to be talking about such an insignificant chunk of a Bitcoin to purchase a pizza that it would be lifetimes before you would be able to eat 1 Bitcoin worth of pizza. And of course, as Bitcoin continues to trend higher and higher, you get to the point where it's just not even measurable in human lifetimes anymore. All right, that metric that has been my favorite for the entire history of this podcast, Bitcoin's 24-hour average transaction rate, is actually doing something that it has never done in the history of the DCA Wednesday series. And that is, we are looking at a lower 24-hour average transaction rate and a higher Bitcoin price. Last week, we were talking an average of 4.55 transactions per second, and currently we're looking at what previously would have been a healthy transaction rate of 3.64 transactions per second before all of the spam transactions. Back when I first started this podcast, anytime we saw above basically pi 3.14 or 3.15 transactions per second, that usually was indicative that the price of Bitcoin had been ripping. Of course, this is not any official kind of TA. It's kind of a gee whiz. And I've often said that correlation doesn't equal causation. And all models eventually break, and this isn't even a model. But also, I think it's also because the price of Bitcoin's only really been pumping in the last couple hours, and this is a 24-hour average. So, the price had been down until while I was doing my show notes, and I've watched the price of Bitcoin explode 5 or 6% this afternoon. So that 24-hour transaction rate takes into account when the price was actually declining. If we were to be recording this podcast 24 hours from now, I would hazard to guess that we're going to see a lot more on-chain activity. But again, that's just a gee whiz. It's not any official kind of metric. Speaking of on-chain activity being a little less, the mempools reflect that as well. Last week, we had seen both Clark Moody and mempool.space's mempools swell more than double, almost triple, to around 84,000 pending transactions in both of those mempools. That had been up from only 6,000 transactions a couple of weeks ago. That has changed dramatically. The mempools have cleared out again. Not completely clear, but mempool.space's mempool is showing that there are only 9,987 pending transactions. So that's down, 74,000 transactions, significantly down. Clark Moody's mempool is showing an almost identical number of only 9,557 transactions pending in their mempool. And so that is pretty cool. That means that if you need to conduct an on-chain transaction, it's going to be a little bit cheaper to do so. Clark Moody's fee estimator was last week. They were saying that a high priority transaction needed to include a fee of 6 Satoshis per VByte to guarantee you're mined in the next block or two. Now they're saying that a fee of just 2 sats per VByte will be mined within a block or two. And they're saying that even if you have a up to a day to wait, that a medium priority transaction should still include a fee of 2 sats per VByte. And that if you have multiple days to wait, maybe up to a week, that 1 sat per VByte transaction will still be mined ultimately within a week. Mempool.space is telling a slightly different picture. They're saying that any transaction, regardless of priority level, should include a fee of 3 sats per VByte. And at the current US dollar price of Bitcoin, that works out to 38 cents, which is still a bargain to be able to send a basically a functionally unlimited amount of value anywhere in the world without anybody's permission, without any third-party intermediaries, to get almost instantaneous finality. I know it might take 10 minutes or an hour, depending on how long it takes for your Bitcoin transaction to get mined, but that's nothing compared to the days or even up to 6 months that it can take for fiat transactions to truly be settled. And there is no true finality for transactions if you think about it, because look at lawsuits or look at the bankruptcy proceedings for FTX, for example, where money had been transferred out and the bankruptcy court orders that it's paid back. So even though the banking system might say a fiat transaction is settled, that can even be clawed back. And, a court just has to issue a demand, send that to a bank, and the bank takes your money. Something that can never be done with Bitcoin if you hold it in custody. You don't actually hold Bitcoin if you hold it on an exchange. So I feel awkward about even saying if you use self-custody, because you either have Bitcoin or you don't. There's no self-custody or custodial Bitcoin. There's Bitcoin. And then it's just a question of who owns it. Either you own it and it's in one of your own wallets, in your own hardware wallet, in your own cold storage, or some exchange owns that Bitcoin and you have an IOU. I know if you listen to this podcast, you probably agree with me, but once again, I'm getting off on a pretty big tangent this early in the podcast. Not since the last Bitcoin Bulletin podcast, but getting closer, it looks like for those of you who are concerned, if you may be mining Bitcoin at home or on a commercial basis or invested in a mining company, the difficulty that it takes to mine a block of Bitcoin is scheduled to be adjusted in 543 blocks. That's a little more than 3 days from now. That's going to happen on approximately March 9th. Last DCA Wednesday, it was looking like it was going to be a modest increase of about 1%. Currently, depending on where you get your data, it's going to be either a modest decrease of about 1% or a slight increase of potentially 0.1%. That is because last week blocks were averaging 9 minutes and 57 seconds, and that is obviously quicker than 10 minutes that Bitcoin aims for. So that means that it was going to get slightly more difficult to mine Bitcoin after the next difficulty adjustment. Now transactions are averaging exactly 10 minutes between blocks. There's still 543 blocks to go and anything can happen. But it's getting close enough that you can make a reasonable assumption that the mining difficulty is going to remain about the same. Again, that only really matters if you're a miner, because there's more than enough network hash rate to guarantee Bitcoin's security. All that it really means is that if there's a difficulty decrease, say we'd get the 1.24% difficulty decrease that's on the low end, that means it's 1.24% more profitable if you're a miner. If we get the 0.1% increase, then it's 0.1% less profitable if you're a miner. If you're just a pleb like me and you're stacking Bitcoin or maybe moving Bitcoin around or transacting with Bitcoin, whether the transaction that you send gets mined in 10 minutes or 1 minute or 1 hour, that's really random chance, because again, blocks don't come in every 10 minutes or every 9 minutes, 57 seconds. They come in randomly. And that's why the Bitcoin Core protocol says we're going to look at the average of 2016 blocks, divide all that block time by 2016. And if it doesn't come out to 10 minutes, then we're going to make a difficulty adjustment to get it closer to 10 minutes. And in this case, it's right on the money at averaging 10 minutes between blocks. So that's pretty cool. Despite that fact, just like if you zoom out far enough, the price of Bitcoin is always up and to the right. If you zoom out just a little bit, even when we're potentially talking about minor mining difficulty decreases, in general, the overall network hash rate has continued to increase. Currently, it's estimated the 90-day average is 789.4 exahash securing the network. That's an extra 2 exahash, 2.3 exahash more than last DCA Wednesday. So while it's possible that we see a slight difficulty decrease, in general, hash rate continues to trend up and to the right. And 789.4 exahash is a mind-boggling amount of computing power. If you look back, not even a year, let's look back to just last summer, last June, we were talking about 574 exahash securing the network. So, we've got a 50% increase in network security just in the last 6 months as newer, more powerful ASICs come online and as more people, more companies, and potentially more countries get into Bitcoin mining. Before we move right along, I want to take that customary minute to thank those of you listening on your favorite Podcasting 2.0 apps such as Fountain. Podcasting 2.0 allows you to support this podcast through the value for value method by either streaming sats while you listen on a minute-by-minute basis, or by sending a boost, or some call it a boostergram, which is basically a shout out, but it's a shout out via a Lightning transaction. So you can let us know what you think about the podcast, what you like about the podcast, maybe what you don't like about the podcast. Let us know something that might be going on in your life or in your community, or even just say hello. But because it is a Lightning transaction, you are sending value back in the form of Satoshis. And of course, when we do have boosts come in, we read them on the next episode. We do not currently have any boosts to read, but of course, thank you to everyone who has been supporting the podcast, contributing value back for the value you feel you're receiving by listening. That is certainly flattering. But even if you're like a lot of people and you're stacking sats and you're doing everything you can to keep the number of Satoshis in your wallet going higher and not lower, you should still listen via Podcasting 2.0, because apps like Fountain actually give you the opportunity to earn Satoshis as well. And you're not going to get rich necessarily, but I earned a couple hundred Satoshis last week listening to my favorite podcasts. And you can either stack those and hope they add up one day, or you can contribute them back to some of the podcasts you're listening to. And that way you can send a boost and without actually having to purchase any Bitcoin or send any Bitcoin out of your cold storage. But either way, you should help support Podcasting 2.0, because, it's not legacy media. It's not like, the equivalent of big pharma. It's not big podcasts. It's not big media. It's pleb focused, pleb forward, pleb centric media that helps embrace the digital open source community. Speaking of our listeners, our geographic distribution of listeners has remained the same this week. Our top 10 countries where our listeners are located remain as follows. Number 1 is still the good old United States of America, where a little over half of you are listening. So thank you to all my fellow Americans. If you watch the President of the United States, not State of the Union address, because they don't refer to the first joint session of Congress address that the president gives as a State of the Union, but that's functionally what it is. It's really the only speech that's mandated by the Constitution that says the president shall at time to time update Congress on the State of the Union. So that's what he did. Depending on what side of the aisle you find yourself, there are people that thought it was a horrible speech, and there are people that thought it was a wonderful speech. It was certainly an entertaining speech, and it was emotional at times as well. But I'm once again getting off on yet another tangent. So thank you to my fellow Americans listening from right here in the good old US of A. Number 2 remains Singapore. If you recall, Singapore sprang onto the scene several weeks ago now and launched all the way to the number 2 position, where they remain today. So thank you to everyone listening in Singapore. Apa kabar? Germany remains number 3. So Dankeschön, mein Freunds in Deutschland. Number 4 remains Argentina, so muchos gracias amigos in Argentina. Number 5 remains Luxembourg, so Dankeschön, mein Freunds in Luxembourg, or Morien to those of you speaking Luxembourgish. Number 6 remains Canada. I know there's been, I think, mainly joking between the President of the United States and certain other individuals about Canada maybe becoming the 51st state. I don't think that was ever anything that was serious. Maybe Donald Trump is serious about retaking the Panama Canal. In fact, I believe he is. Maybe he's serious about, maybe Greenland becoming U.S. territory, but I think Canada was just him poking at Justin Trudeau, because the two of them certainly don't get along, and Donald Trump tends to be jovial and boisterous, especially when he's taunting the people that he doesn't get along with. So number 6 remains Canada. So thank you to those of you listening in the hopefully not much longer frozen white north. Number 7 remains the United Kingdom. So thank you to our cousins across the pond. Number 8 remains Spain. So hola, muchas gracias amigos en España. Number 9 remains Australia. So thank you to those of you hanging on upside down on the other side of the world. And number 10 remains Mexico. So again, muchas gracias amigos in Mexico. On to the news. Of course, I say so often that I really don't like talking about price, that there's more important things to talk about, that price is a distraction. But once again, price seems to be dominating the news. And that is because, well, last week, everyone was in a tizzy because the price of Bitcoin had dropped below 90,000. And then it dropped into the upper 70s. And then, of course, we had that $10,000 daily green candle on Sunday, followed by the $10,000 daily red candle. And now we find ourselves where we find ourselves. A lot of this has been FUD over, President Trump's economic policy and any impact to the economy that tariffs might have, followed by pumps every time anybody says anything positive about the United States Strategic Bitcoin Reserve. Of course, a lot of the negative news, a lot of the fretting, and a lot of the dump came when Trump decided that this was in fact going to be a strategic crypto reserve and not a strategic Bitcoin reserve, with Reuters running the headline, Trump names cryptocurrencies and strategic reserves, sending prices up. And he announced that Bitcoin, I guess I'm getting ahead of myself. Originally, it was assumed by most of us that this was going to be a strategic Bitcoin reserve. Then after Inauguration Day, we saw altcoiners like Brad Garlinghouse of Ripple Labs, etc., lobbying the snot out of the White House to try and get their altcoins included in the reserve. And then we saw even Michael Saylor start to reference it as a strategic crypto reserve, even Cynthia Lummis, who introduced the Bitcoin to Strategic Reserve bill into Congress, referring it as such. So that caused a little bit of fun, a little bit of wobble. Then, just a couple of days ago, President Trump announced that the reserve would consist of several currencies, and of course, that was to include Bitcoin and Ethereum. Announcing March 2nd, just 3 days ago, according to Reuters, U.S. President Donald Trump on social media announced the names of 5 digital assets he expects to include in a new U.S. strategic reserve of cryptocurrencies on Sunday, spiking the market value of each. Trump said in a post on Truth Social that his January executive order on digital assets would create a stockpile of currencies including Bitcoin, Ether, XRP, Solana, and Cardano. These names had not previously been announced. Sidebar, obviously, we were all assuming that XRP was going to be part of the pie because of just how much influence it appeared that Brad Garlinghouse was having or trying to exert over the government. Continuing, the names had not been previously announced. More than an hour later, Trump added, and obviously BTC and ETH as other valuable cryptocurrencies will be at the heart of the reserve. The Bitcoin, the world's largest cryptocurrency by market value, was up more than 11% at $94,164 on Sunday afternoon. Ether, the second largest cryptocurrency, was up about 13% at $2,516. I want to point out that if the United States decides, if the Trump administration decides that they too have to touch the stove, if they're going to go the Dave Portnoy route and become full-on shitcoiners, this does not hurt Bitcoin. Is it disappointing? Yeah, sure it is. But all it means is that the U.S. is going to touch the stove. It will be bad for Trump, as those other cryptos, they trend to zero against Bitcoin. But even if XRP, for example, were to rug the U.S. entirely, it might damage Trump politically. But again, it doesn't hinder Bitcoin a single iota. Yes, it might be bad for the United States, but only predominantly in the terms of this is a missed opportunity. But again, as far as Bitcoin is concerned, and as far as even the United States is concerned, and the current administration and their shitcoining is concerned, you got to step back and ask yourself this simple question. Is the current environment, at least in the United States, is the current environment for Bitcoin adoption better now, even with the rampant shitcoinery, or over where we were, just a month ago when we had Gary Gensler and Elizabeth Warren and Operation Choke Point 2.0? Remember the anti-crypto army and all of the lawsuits and the lack of clarity from the government on who they would come after, what businesses were going to be tolerated, the refusal even under court order to provide any kind of regulatory clarity. If Honey Badger doesn't give an F, then it certainly doesn't care if countries playing fiat games also gamble in the shitcoin casino. Pierre Richard, who's as eloquent as any of the OGs, reminded us that when these altcoins inevitably trend to zero in Bitcoin terms, the SBR will eventually become Bitcoin only, one way or another. Tweeting on Sunday, as altcoins inevitably demonetize and trend to zero relative to Bitcoin, the strategic reserve will naturally become Bitcoin only. Folks, this is economics 101. If you step back and look at what the top 5 or top 10 cryptos by market cap were 10 years ago, most of them don't even exist anymore. They're certainly not in the top 10 anymore. Even just 4 years ago, we're sure Ethereum was there, but Cardano and Solana weren't. XRP sure as hell wasn't. Eric Dale, Eurodale on Twitter, I quoted him in the intro, had a slightly different take on the potential fumbling of this historic opportunity. When he posted a screenshot of Donald Trump's Truth social media post and said, I kind of hope all governments will be this stupid until it's too late. Again, that's Eric Dale, who is at Eurodale on Twitter or X, and I wholeheartedly agree. I often say when people are panicking and dumping their Bitcoin, that I don't want you to sell your Bitcoin to BlackRock. I don't want you to sell your Bitcoin to Wall Street. And I don't want you to sell your Bitcoin to the United States or to Germany or to China or to Japan. I want Bitcoin to be in the wallets of ordinary plebs, as did Satoshi. Obviously, Bitcoin is for everybody, and the banks and the countries have just as much right to purchase Bitcoin and to stack Bitcoin as we do. But every Satoshi that ends up in one of these reserves is a Satoshi that's not going to be available for you and I to build generational wealth for our families. And so, if the governments are going to be this retarded, if they're going to engage in the shitcoin casino instead of just stacking Bitcoin, well, that's on them. And hopefully, by the time they finally do figure it out, because when they do figure out, it is going to pump the price and it's going to make it harder for you and I to stack. And hopefully, before they do, you and I will have had a chance to at least make 1 or 2 of our stacking goals, even if we do keep adjusting our stacking goals higher and higher. It'd be nice to not say, gee, I wish I had been able to become a whole coiner or a half coiner or even just stack 1 million sats before even that becomes unaffordable. Billionaire hedge fund founder Bill Miller tweeted a couple of days ago, Bitcoin is the largest, most liquid digital asset and the only one suitable for a nation state's coffers. When the heads of the largest crypto companies in America all say the same thing, parentheses at Brian Armstrong did too, it's probably worth listening at David Sachs 47 and at Real Donald Trump. What of course he is referring to is the outpouring of support for a Bitcoin only strategic reserve. And if you remember just months ago, Brian Armstrong, the founder, CEO of Coinbase, couldn't find it possible to even type or say the word Bitcoin. Even though Bitcoin is the bread and butter that it made him everything he is. It's the largest crypto, hands down. He just couldn't bring himself to say it. But that changed apparently in response to Donald Trump proposing these altcoins for the strategic reserve, with Brian Armstrong tweeting 2 days ago, excited to learn more, still forming an opinion on asset allocation, but my current thinking is, 1, just Bitcoin would probably be the best option. Simplest and clear story as successor to gold. 2, if folks wanted more variety, you could do a market cap weighted index of crypto assets to keep it unbiased, but probably option number 1 is best. American Hodl summed this up when he said, LMAO, can't believe I'm saying this, but I agree with Brian Armstrong. Predator on Twitter posted, the grifting's gotten really bad when the shitcoin administration makes at Brian Armstrong look like a Bitcoin maximalist. And of course, Adam Back, the ultimate Bitcoin OG, tweeted, good on Bitcoin only at Brian Armstrong with a thumbs up. Of course, early this morning, Pete Rizzo, the Bitcoin historian, tweeted, breaking, U.S. Commerce Secretary Howard Lutnick says strategic Bitcoin reserve will be announced at Trump White House summit. Other tokens will be treated positively but differently. This is massive. He is, of course, referring to the White House Crypto Summit on Friday. That is what has been pumping markets today, allegedly. And this is all according to an article in the Pavlovic yesterday, quoting that article saying, President Donald Trump is expected to announce a significant shift in cryptocurrency policy this week, including plans for a Bitcoin strategic reserve, according to Commerce Secretary Howard Lutnick. The article says, Trump, who has increasingly aligned himself with the digital asset industry, will outline his vision for Bitcoin and broader cryptocurrency regulation. Quoting Howard Lutnick, Secretary Lutnick, the president definitely thinks that there's a Bitcoin strategic reserve. Now, there will be the question of how do we handle the other cryptocurrencies? And I think the model is going to be announced on Friday when we do that. Lutnick suggested Bitcoin would receive unique status under Trump's plan. Quote, a Bitcoin strategic reserve is something the president is interested in. He spoke about it all during the campaign trail, and I think you're going to see it executed on Friday, Lutnick said. Quote, so Bitcoin is one thing, and then the other currencies, the other crypto tokens, I think will be treated differently. Positively, but differently, he added. Of course, the Bitcoin maxis have been lining up to announce that they will be attending this summit, with Michael Saylor tweeting yesterday, I have been invited to the Digital Asset Summit at the White House this Friday, hosted by the president. And I know Nick Carter is not a Bitcoin maximalist. He was kind of, the Bitcoiners were kind of a cheerleader for him for a while when he was going after scams, after FTX, etc. But, he's never been a Bitcoiner. He's always been a crypto investor. He tweeted back in January, and then he retweeted 2 days ago, a post saying, how Bitcoiners feel about adding the government buying XRP is how anyone not in crypto else feels about the government buying Bitcoin. So I agree that buying crypto and adding it, diluting the strategic Bitcoin reserve with these scam coins is bad for the country. It's not the smartest decision, but Nick Carter has a point. We're talking about 3% Bitcoin adoption globally, and even a big chunk of those Bitcoiners, people who are invested in Bitcoin, are also gambling on the altcoins because they really haven't become maximalists yet. They haven't done the research. They haven't maybe gotten burned by touching the stove. So for the average normie, though, they still think that real money is paper that the governments print, and they think that. All right. I had a snafu there. My microphone disconnected, and I went on for another 15 minutes without realizing that my recording had stopped. So sorry about that. Where was I? I was talking about Nick Carter's quote. And then I went in to talk about altcoin season, why I think altcoin season isn't dead because it rides on Bitcoin's coattails. And then when we see Bitcoin continue to go on this bull run and set its ultimate all-time high, that unfortunately altcoins will pump, that they'll be with us forever. As long as there are scammers, there will be altcoiners trying to scam as well. So then I got into saying, in addition to worry over the U.S. dropping a ball, there were a lot of hand-wringing over El Salvador this week, particularly in light of news that the IMF loan agreement allegedly prohibited El Salvador from purchasing or even mining any additional Bitcoin. But fortunately, numerous people had corrected that record, including President Nayib Bukele himself. He retweeted a tweet from El Salvador's The Bitcoin Office, where they showed proof that they had stacked an additional Bitcoin yesterday, despite the fact that the rumors were they would not, saying, quote, this all stops in April, quote, this all stops in June, quote, this all stops in December. No, it is not stopping. If it didn't stop when the world ostracized us and most Bitcoiners abandoned us, it won't stop now, and it won't stop in the future. Proof of work greater than proof of whining. And he put Bitcoiners in quotes, meaning not Bitcoiners abandoned us, but most quote unquote Bitcoiners that were pretending to Bitcoiners abandoned them. So I guess only time will tell. As President Bukele says, proof of work is greater than proof of whining. But as of now, regardless of what you might have heard from the IMF, despite the fact that they did have to modify their Bitcoin law a little bit, El Salvador claims they are still full speed ahead and they will continue to stack Bitcoin. Then I went on to talk about other nation states foaming in on Bitcoin because the Bitcoin historian Pete Rizzo had tweeted a couple days ago, just in, China holding closed-door meetings on a strategic Bitcoin reserve, according to Trump advisor David Bailey, the pivot of the century. And, that's just a no-brainer that when the United States in particular announced that they're going to form a strategic Bitcoin reserve, that naturally other countries would want to get in on the action as well, especially countries that might be competitors to the United States. They might try, not necessarily enemies of the United States, but countries that want to see themselves as equals or maybe even better than the United States would feel the need to FOMO in as well. Of course, in all the fervor surrounding these SBRs, it can be easy to forget, of course, as I already mentioned, that we're a million miles away from where we were just a month ago, a little over a month ago, with the previous administration in the United States. That was reflected at the end of last week when it was reported that the Securities and Exchange Commission has dropped its lawsuit against Coinbase. It was voluntarily dismissed with prejudice, which is legal speak, meaning it can't be refiled again. Something that would have been unthinkable until President Trump was inaugurated. So while we all get distracted by this S-coinery that's going on in the White House, it's important to remember that Honey Badger doesn't care. But what it does care about, it even doesn't care if, they say that, we were going to always have the then they fight you and that Bitcoin just doesn't care. Bitcoin will win anyway. But it certainly doesn't hurt to have an environment where you no longer have companies that are trying to innovate in the Bitcoin space lose their bank accounts, where you have countries trying to throw Bitcoiners and Bitcoin software developers in jail for various anti-bank secrecy laws, KYC law violations, etc. But it's also important to remember that this country is made up of 50 states and that the states are pursuing their own strategic Bitcoin reserves. And for the last couple of weeks, it had looked like Utah was going to be the first state to establish a strategic Bitcoin reserve, and that could still happen. But as of today, it looks like Texas may actually take the lead, with Carl Menger tweeting yesterday, breaking, Texas takes the lead. Strategic Bitcoin reserve is set for a crucial vote tomorrow. This is only the beginning. So it looks like Texas, as of tomorrow, may become the first state to actually establish a strategic Bitcoin reserve. But one thing's for sure, it will not be the last. And reminding you, it is not just countries and states that will be competing for Satoshis, but companies are as well, with Bitcoin Magazine tweeting last week that Metaplanet was going to raise an additional 2 billion yen to buy more Bitcoin, followed up just 4 days later with an announcement that Metaplanet had purchased an additional 156 Bitcoin for $13,400,000, bringing Metaplanet's holdings up to 2,391 Bitcoin. And then today, Metaplanet announced that they had purchased another 497 Bitcoin for an additional $43,900,000, bringing their total up now to 2,888 Bitcoin. So while companies like MicroStrategy seem to get the most headlines, other countries out there are stacking almost as furiously as MicroStrategy. And again, there are probably many companies that are stacking that we'll never know about because they're not publicly traded and they don't have to report their holdings. And there are others that are probably stacking that it's just a matter of when they fire the next quarterly reportings that we'll find out. But either way, eventually more and more companies will join the bandwagon as states, countries, and companies all FOMO in to get a piece of that last million Satoshis that are last million Bitcoin that are out there yet to be mined. Bitcoin historian Pete Rizzo tweeted yesterday, breaking, Japan's oldest commodities exchange, ODEX, applies to be the first in the country to list Bitcoin futures. They know what's coming. So it isn't just Japanese companies getting in on the business. Japanese version of Wall Street looks like they're getting on the Bitcoin bandwagon as well. Bitcoin historian Pete Rizzo tweeted today, fact, billionaire Ken Griffin's Citadel Securities is entering the Bitcoin market. They trade 450 billion daily. Buckle up. So even here on Wall Street, things continue to heat up. All right. I probably skipped over a few things that I had actually already talked about, but got cut off when I had my microphone unplugged. I'm seriously disappointed in that. Sorry for anything that I jumbled or neglected to cover in full as a result. But I need to move along to the DCA segment of this podcast before Bitcoin continues its pump and I end up purchasing less than 1,000 sats per dollar. That'd be a bummer if that happens while I've been playing with the microphone and yammering on. So on to what makes today and every Wednesday special, and that is that every Wednesday, at least here on the Bitcoin Bulletin Podcast, is DCA Wednesday. And what is DCA, you might ask? Well, DCA is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, today will be our 189th weekly stack. We started our stacking our equal portion of just 20 US dollars all the way back on Wednesday, July 28th, 2021, so almost 4 years ago. So during the previous 188 Wednesdays, we converted a total of 3,760 US dollars into a stack of more than 10 million Satoshis. 10,434,198 sats to be precise. And we did so at an average purchase price now of $36,035.35, which is significantly cheaper than Bitcoin's current price, and significantly cheaper than if we had YOLO'd all in back on that first DCA Wednesday, when even then Bitcoin was worth more than 39,000 US dollars per Bitcoin. Today, as usual, to grow that stack, I will be using the handy dandy Cash App. Cash App is not a sponsor of the show, but I do love them for stacking smaller amounts of Bitcoin. This is a you do you thing. If you're going to stack larger amounts of Bitcoin, Cash App probably isn't for you because they charge higher fees than other exchanges or services do. But for small amounts, I think the benefits outweigh the higher fees, especially considering Cash App will let us transfer that Bitcoin to my hardware wallet without a mining fee. So when you're talking about only $20 of the Bitcoin, if you don't have to pay a $3 or $4 mining fee like Coinbase will charge you to move that Bitcoin, that's easily going to make up for the 45 cents in fees we're going to pay for mining, for purchasing Bitcoin. All right, so I already have money in Cash App. Got my phone out, got the Cash App open, so it's just a matter of tapping Bitcoin, tapping buy, entering 20 US dollars, tapping confirm, and boom, just like that, we've purchased another 21,344 sats at a price of 91,595 US dollars. Bitcoin had briefly topped $92,000 when I was talking. I watched that happen out of the corner of my eye. So I feel fortunate that it didn't continue going up. It actually trended back down much closer to where it was when I started the podcast. So that is cool. Those 21,344 sats bring our stack up now to 10,455,542 sats. They also increase our average purchase price, our average cost basis by about $120, actually by $117.73. So our average purchase price is now $36,153.08. Not too shabby, considering that Bitcoin is worth almost triple that. Not quite, but close enough for our purposes. And of course, this gets into talking about price, and maybe it isn't in keeping with the keeping the low time preference and staying humble. But when Bitcoin does retake that $100,000 mark, which it could do imminently, I believe it will certainly do it before this summer. That means our stack, without adding one more Satoshi, would have a fiat value of $10,455.54. And considering we've converted just 3,780 US dollars now into Satoshis, that goes to show the power of dollar cost averaging. I mean, at just 20 US dollars a week, we built a stack of more than 10 million sats, which, for the average pleb right now, might seem like an impossible goal, especially as Bitcoin retakes $100,000, maybe goes to $200,000. Certainly when Bitcoin hits $1 million, because then that stack would have a US dollar value of $104,555.42, which is certainly more than the average US citizen has readily available to convert into Bitcoin. Of course, if Adam Back's $10 million Bitcoin prediction comes true, that stack will be worth more than $1 million US dollars, certainly more than the average pleb has sitting in dry powder ready to stack Bitcoin. And when Fidelity's Jurian Timmer, their director of global macro's $1 billion Bitcoin price prediction eventually comes true, that stack could be worth $104,555,420. And then all of a sudden we would be in that category where we will be the people that the envious ones or the media are talking about when they said, if you'd stacked just 10 million Satoshis 10 years ago, you'd be a millionaire now. You'd have $104 million. And people are like, wow, if only. Could you imagine being so lucky as to have gotten to purchase Bitcoin for less than $100,000, less than $500,000, less than $1 million, less than $10 million per Bitcoin? Again, not too shabby considering that we've converted a modest 3,780 US dollars, and that we did so by stacking just $20 a week worth of Satoshis once a week, every week on Wednesday for just under 4 years. Before I go, as usual, I want to reach out to you and ask you to say hello. You don't have to send a boost if you are stacking sats and you can't afford to send Satoshis to help contribute value back to this podcast. It doesn't matter. What's important is I like to hear from you. It makes it all worth it for me. And you can do so for free by sending me a DM on Twitter. My DMs are open and I check them and I do respond. On Twitter, the podcast is at BTC Bulletin Pod. Again, that's at BTC Bulletin Pod on Twitter or X. And if you don't use Twitter, you don't use X, of course, we're on Nostr, but you can also send us a good old-fashioned email. And my email is bitcoinbulletin@protonmail.com. Again, like the podcast, bitcoinbulletin@protonmail.com. Either way, do not forget to join us next Wednesday while we grow that stack of sats by stacking just $20 US more. And as we continue to do so every Wednesday until there's either no more Satoshis left for sale, or at least Satoshis that no one's willing to trade us worthless paper money for. But either way, don't forget to keep on stacking those sats, you sexy sat stackers.